It's pretty amazing time for people investing in the mining space, or at least thinking of investing in the mining space. I even saw a BHP report talking about commodities of the future: copper, potash, unbelievable,
Yeah.
but it's the future, and nickel.
Mhm.
You made it.
Yes, yeah, and again, this is from, as for context, BHP spent most of the 2010s, in fact, about 7 years of that decade, trying to sell their nickel business. So, again, this is a full 180-degree flip in terms of their view on that commodity. So, again, I would encourage, people, if BHP is thinking this way, there's a pretty good chance Rio Tinto's thinking this way, Anglo American, Glencore, and all of the other, mining companies further down the food chain. So, again, I think, they're the ones, if you're going to see big takeouts happen, they're the ones who have the cash to be able to do the big takeout. So the fact that those three metals made the list, I think is pretty important.
That's pretty exciting for sure. But let's stick with the nickel thematic here. So,
Yeah.
what are they're clearly going to be looking for scale, and they're going to be looking for grade, and they're going to be looking for the right jurisdictions. But what has the past or history taught us about the way that they go about making these acquisitions?
Well, so, again, in the nickel space, if you just look, so they sort of made this shift around 2017, 2018. And so, what you saw was, one, they developed their Yakabindi project, which was just up the road from their Mount Keith operation that had operated for 25 plus years, was a large scale, low grade mine. And again, that's where, again, I think a lot of retail investors, it's grade, and it does, high grade does make things easy, but you typically don't find 30-year mine life, high grade resources anymore in a jurisdiction that any company would like to operate in. So, the reality is, for the majors who want, multi-decade, multi-expansion type resources, it tends to be at the lower grade end of the spectrum. So they developed Yakabindi. They just bought Honeymoon Well from Norilsk, which is in the same region in Australia. And again, it's another large scale, low grade deposit. So again, it's scale. They want something that they can get multiple commodity cycles out, because they know you may not get it right the first time, but if you can, you still have lots of resource to pick it up the second, third, and fourth time, then you've got a better chance of making money over the long term on your investment, which is, what those guys are very focused on.
And so which one are the jurisdictions that they are most likely to be interested in?
Well, again, when you look at their asset portfolio today, for BHP, Rio Tinto, it's really, Australia, South America, and North America, are the, the vast bulk of their assets. Again, political risk. Some companies, so Glencore seems to be more tolerant of political risk, and some of the larger Chinese companies that have gone abroad are also, more comfortable with the degree of political risk. But, again, as we saw this week with Northern Dynasty in the gold space in Alaska, they thought they had their permit and then they didn't have their permit, right? So, and again, it's not just a country, it has to come down to an individual jurisdiction that you need to look at. So, they don't want to have assets turn to zeros or have their values greatly diminished by the decision of one political decision, making that happen. So, if you look at their, asset allocation breakdown, you'll see it focused in a very small handful of countries.